Hello and welcome to the IM Mastery Academy. Today we're going to be talking about HFX in the Master the Skill video series. Today we're going to be talking about HFX strategies specifically. The purpose of this video series is to provide an overview of the HFX strategies taught by the IM official educators and to help you improve your trading success. We will be covering the associated indicators of each strategy and how to use them. As we begin, it's important to remember the 3 steps to trade success. Step 1 is to identify if price is consolidating or trending. If price is consolidating, we want to look for trade entries at the top and bottom of the consolidation range. If price is trending, we want to look for trade entries in the direction of the trend. Step 2 is to confirm your trade idea using the indicators provided within the strategy. And step 3, we enter the trade in the appropriate direction, a call option if we're predicting the price will go up, or a put option if we predict the price will go down, with a trade time expiration of either 3 candles or a time given by the IM official educator. To identify whether the market is consolidating versus trending, we need to identify different pivot points in the market. And as you can see in this example on the euro to US dollar, you can identify put and call options at the top and bottom of the price consolidation range. And once price breaks out in a given direction, either up or down, we can then look for put options in a downtrend or call options if we're in an uptrend. Now that we've covered the 3 steps to trade success, and you understand the importance of first identifying if the market is in a state of consolidation or a trending time, let's dive into the pickpocket strategy to identify how to utilize these specific indicators in order to improve our trade success. Now, pickpocket can be found on the Liberty website, found at goliberty.im, and if you come up to the Strategies tab and then scroll down, you'll find it here with pickpocket. We have separate videos for Simple Scalper and Web Slinger as well, and you can refer to those for additional details regarding those specific strategies. For this video, we'll be covering pickpocket. Now first, in our steps of trade success, we need to identify which phase of the market that we are in, whether a consolidation, often referred to as contraction, or in a trending time. And you'll note here on the euro to US dollar that we have both of those phases illustrated in today's price movement. Now first, to familiarize you with this platform, you want to first notice what time frame you are in. This number 5 indicated here, as well as the 5M, both refer to the fact that we are on a 5-minute time frame chart. This is important in identifying how long of a trade or a trade time expiration that we want to choose. Typically, we follow a 3-candle rule, which means that if we are on a 5-minute time frame chart, we want to place a 15-minute trade. That is 3 times 5 to get our 15-minute trade time expiration. We also have here over on the right an alert panel, and where different trade ideas will come up. It has a time pass which indicates how long it has been since it first posted this trade idea. Now these are simply trying to clue you in to potential locations where you might find a trade idea. And for the purpose of this video, we are going to talk about these different phases and how to apply the best strategies in order to win consistently. Now, first of all, you need to understand there are 3 indicators on the pickpocket strategy that we utilize in combination together. The first is this line here, indicated by this burgundy line, which when it is above the candles is burgundy, and when the line crosses down below the price or below all of these candles, it turns green. So you'll note that here, when price was in a downtrend, the line is this burgundy color the entire time. And even during this state of consolidation, this line is green because price is currently above it. We also have this purple moving average line, which is a 200-point moving average line. This is useful as a general trend indication, which can be interpreted by if the candles are below the purple moving average line, price is said to be in a downtrend. If price is above the 200-point moving average line, price is said to be more in an uptrend, or at times having upward pressure. And you'll note during a state of consolidation like we see here, we get repeated crossovers of both the super trend line as well as this 200-point moving average line. This is very typical and classic of a consolidation phase. So if you happen to see the candles crossing over both repeatedly, you can know almost immediately that you are in a state of consolidation. Now, to help further clarify this, we have these fractal points, which are simply the pivot points in the market. A fractal represents the furthest point out of 5 individual candles. The top pivot will indicate a red triangle, and the bottom pivot will be indicated by a blue triangle. They are simply a point of reference and not necessarily a reason to get in the trade, but give you an idea for where the pivot points are in the market. Now, as we discussed, we first have to identify which phase of the market that we are in. At this particular time, we are clearly in a state of consolidation. And so we end up with top pivot points, and we have bottom pivot points in the market. And the way that we approach this strategy is to look for entry opportunities at the top and bottom of the given consolidation range. Now, either drawing a line simply like this, or you would see in a separate video with the simple scalper strategy indicated up here. With the Bollinger Band, it can give you a dynamic idea for where the top and bottom of these wave patterns are and give you an idea for where you might take some trades. A different way of approaching that is to simply look at the super trend line. When the price comes back up to the super trend line, when price is below it, you can look for potential put option opportunities. When price is above the super trend line and comes back down to it, you can look for call option opportunities. That is one way to approach utilizing the super trend line during a state of consolidation. Utilizing an indicator such as the Bollinger Band, as found in the simple scalper strategy, which again is in a separate video, can also be very useful at identifying these key moments where price turns around and at the top and bottom of the overall ranging market. Now, once price breaks out to one side or the other, you'll note that price then stays on the same side as both the 200-point moving average line, which you see here on this purple line, as well as the super trend line, which is indicated by this burgundy line here. So all of the candle activity is below. And the way we trade a trending market, especially when it's trending strongly, is we need to look for candles that are moving in the direction of the trend after a time of retracement. Because the market is constantly moving in wave-like patterns, we want to enter in when price comes back to retest at these moments before continuing on in the overall trend direction. So we see this here as price broke down below this previous ranging time, indicated by this large red candle. Price then retraces back up to this previous ceiling, indicated here. And a confirmation candle is simply this red candle here. This small red candle indicates that price came up and then it stopped and is now going back down. And so one strategy that we can apply is to simply identify that price is below the super trend line here. It is also below our 200-point moving average line. With both of those confirmed, we get our confirmation candle, which is a red candle, and we place a put option with our 3-candle rule. That means we're going to place it for 15 minutes in this case because we're on a 5-minute time frame chart. And you can see at this time, after our blue candle and then one confirmation candle, you count simply 3 candles, 1, 2, 3, price closes at this point, and we win that trade. So we would place a put option at that point. Now, at this moment, we had another blue candle and then followed by a red candle. Once again, this indicates that there was some level of retracement and then a trend continuation. A red candle because we're in a downtrend. If we were in an uptrend, we would look for the opposite. We would look for a red candle to go against the uptrend and then a blue candle indicating continuation in the uptrend. So here we place our put option after this red candle because it is in the direction of the trend for 3 candles. 1, 2, 3 candles. Price closes at this point below our entry point, and that's how we win that trade. Now here, once again, we have an additional blue candle retracement followed by a red candle. So we place our put option at the bottom of this for 3 candles. We have 1, 2, 2, and then 3 candles. Here, this one is rather close. So this one may or may not have 1, and we do have the option on some brokers to roll over the trade if the trade is not in the money by the end of the first 2/3 of our trade. Or in this case, at the end of the first 10 minutes of our 15-minute trade opportunity. And so if we had rolled that over even just once, that would go an additional 3 candles, which would be 1, 2, 3 here, and that trade would have won. Now, even assuming you didn't roll over that trade, if you happen to be on a broker that does not allow rollovers, you can accept that loss and move on. So after that, we have our retracement candle, this blue candle here, and then we have a downward candle once again. This indicates a trend continuation. We're still below the super trend line. We're also below our 200-point moving average line, which is our main trend indication. So we place a put option at the close of this red candle, and then we go 3 candles. So 1, 2, 3. Here's where the price closes. It is below our entry point, and we win that trade. So you can see over and over and over again in a trending time through very simple and objective analysis, simply confirmed by price being below our 200-point moving average line and below the super trend line, we can win repeatedly in the market with some very simple and objective rules applied to our trading. Now, if the trend then begins to change and we move back into a state of consolidation, we then simply adjust our strategy to take trades at the lower and upper levels of that contraction or that consolidation range. And once again, if you want an additional strategy that works very well for that, the simple scalper is an additional strategy and tool that you can utilize within the IM services that can help you improve your overall success. So pretty simple with the pickpocket strategy. That's how you apply it in both a ranging time when the market is consolidating as well as a trending time. And we simply follow the same exact principles in reverse when the market is trending in the upward direction, as you can see here. We hope you enjoyed this HFX video in the Master the Skill video series. Have an absolutely fantastic day and best of continued success with your trading.